Hello everyone and welcome to episode number 5 of the Candlestick course for beginners. My name is Mr. Crypto Tracker and I'm going to teach you how to trade with candlesticks. But before we start this episode, please make sure to subscribe to the channel if you didn't do it so far, and also turn the notification bell on to get notified when a new video comes. In previous episodes, I focused on single candle lines with small real bodies. These small real bodies project indecision in the market, especially when they form at support and resistance areas. Now, in this episode, I will talk about long real bodies. Candle lines with extended real bodies can also display strong signals, especially when they touch support and resistance zone. So episode number 5 is all about belt hold candlesticks. But let's take a look at the learning objectives and see what you are going to learn in this episode. You are going to learn about market sentiment that underpins long green or red bodies. You will learn about bullish or bearish belt hold candlesticks, what they look like and what they mean. And also you will learn about the importance of belt hold candlesticks when they appear at support or resistance. There are two different types of belt hold candlesticks, bullish and bearish belt hold candlesticks. The bullish belt hold is a tall green candle, as you can see here, which opens on or very near the low of the session and close at or near the high of the session. As you can see here, this small shadow shows the highest price, and here you can see the close of the candle. They are so very close to each other. When bullish belt hold candlestick appears in a downtrend, it forecasts a potential rally, a potential reversal from here. When it appears in an uptrend, it keeps the bull trend, the bull trend intact. It means if you see a candle like this in an uptrend, it can be a signal for trend continuation. But let's talk about the bearish one. The bearish belt hold is a long red candle that opens at or near the high of the session. Then it drops lower as the session unfolds. If this candle line appears in the context of a major uptrend, it may form a top reversal. So generally speaking, the longer the height of the belt hold candle line, the more important is the signal it gives. Look at here, if there is a relatively huge price difference between the open and the close, then we can conclude, in the case of the bullish belt hold, we can conclude the bulls are in control of the market. And conversely, for the bearish one, if we see a relatively huge price difference between the open and close of this candle, we can conclude bears are in control of the market. As you can see in this slide, belt hold candles that appear at prior support or resistance area, they are extremely valuable signals since they increase the chance of a reversal. Belt hold candles also gain value as a reversal signal when they have not appeared regularly on the chart's recent time frame. For example, here, after many different candles and right at the prior resistance area, these bearish belt hold candle appears. So in this case, it's very important signal for us, and also in this case, after having a downtrend and many different candles, suddenly a bullish belt hold candle appeared right at prior support area. So this is very important for us. Like many candle trend reversal signals, bullish and bearish belt holds can play an important role in sound money management principles. Let's say you are in a long trade and your stock price rises nicely in an uptrend. After a few sessions, a doji or a spinning top appears. If you don't know about the doji or spinning tops, go back to previous episodes. That's all about doji and spinning tops. So suddenly a doji or a spinning top appears, then a bearish belt hold forms. The doji was a warning to scale back on longs, but the bearish belt hold completely confirms the reversal and could signal a time to consider closing your entire position and taking your profits. And also we can assume another scenario, the reverse scenario. So the reverse scenario occurs if you are holding a short position in a downtrend, like what you can see here. Let's assume you are shorting the market here and we are in a clear downtrend. Perhaps the decline slows, as you can see. The decline slows down right close to the previous support. And a bullish belt hold forms at a prior support area. In this case, you may choose to cover part or all of your positions to preserve your gains here. If you don't have a sound money management system and you don't have any idea about them, I have recently published a course on Udemy about how you can develop a money management system for yourself. The title is Money Management System for Traders. If you search it with this title on Udemy, you can find this course there. And if you scroll down, you can see the course content here. And the first 2 episodes, you can watch them for free. And then you can decide whether it's a good course for you to buy it or not. But anyway, you need to have a money management system. You can learn it either by reading different books or watching like a mini course like this one. And in case if you don't have access to Udemy, or you can buy from Udemy in your country, please go to my Twitter and DM me on Twitter. I will give you access on another platform. Let's summarize what we learned so far about bearish and bullish belt hold candlesticks. As for the bearish belt hold, it is a red candle opens at or near the high of the session, as you can see in this photo, then drops lower as the session unfolds. If this candle appears in a major uptrend, it may form a top reversal signal for you. It has significant power in foretelling a trend reversal if it opens near resistance and closes very down, accompanied by a strong volume. And as for the bullish one, it is a tall green candle that opens at or very near to the low of the session. You can see it here, and close at or near the high of the session. When it appears in a downtrend, it forecasts a potential rally after that. And when it appears in an uptrend, it keeps the bull trend intact. It can be a signal for trend continuation. So far, I talked about the size of real bodies in detail, but still the candle's upper and lower shadows, or not having any shadows, also tell you a story. In the last episode, I talked about the long lower shadows of hammers and long upper shadows created by shooting star. The long lower shadow of the hammer echoed the fact that at some time during the session, the market had sold off sharply, but by the session's end, the market had to regain all the lost ground and close at or near the high of the session. In other words, the long lower shadow visually shows you that the market had rejected lower price levels. A long upper shadow, such as that in a shooting star, shows a market that tests and then rejects higher prices. So like what I talked so far, if there is a tall green candle, like what you can see here, that also has an extended upper shadow, we have a good candle with relatively tall real bodies and also a relatively long upper shadow. The upper shadow offsets some of the bullish implications of this tall green candle. And conversely, the bearish implications of a long red candle, as you can see here, this long shadow mitigated, this long shadow shows that some buying pressures came into the market before the candle closed. So when analyzing candle lines, you should consider both the real bodies and shadows and the story these two important parts of a candlestick tell you. Okay, let's imagine you see a market stabilizing at prior lows or support zone, as you can see here in this Bitcoin weekly chart. At that time, many of the shadows develop with definable long lower bullish shadows. You can see here. Despite the size of the real body, you can see a relatively big body, and also this shadow is noticeable. This tells you that buyers are accumulating each time the price comes down to that support level. So the lower chart is the exact same chart but on daily time frame, and here you can see two relatively big real bodies with relatively long lower shadows, which has a very bullish implication because they appeared right at prior support area. So as a trader or investor, you might monitor that stock or that cryptocurrency for a possible basing move and subsequent long entry if and when it penetrates resistance on strong volume. So far you have learned how powerful single candle lines can be, and when they develop near support or resistance, they can become even more potent. So let's have a quick summary about the belt hold candlesticks. The longer the height of the body, the more important the signal it gives. The belt hold candles that appear at prior support or resistance are extremely valuable signals since they increase the chance of a reversal, and also they gain more value as a reversal signal when they have not appeared regularly on the chart's recent time frame. So this is the end of this episode. In the next episode, I will talk about different candle patterns. These patterns constructed of two or more candle lines give incredibly powerful signals that help foretell trend reversals. So far we also talked about a single candlestick, but in the coming episodes we will talk about 2 or 3 candlesticks together and see how they can send us a message about the next possible move in the market. So please go back and review the previous episodes, and also go on different charts and different time frames and try to find those candles you have learned so far, and see what happened after those candles appeared on the chart. So see you on the next episode.